walk you through that. And of course, everything that we share with you on these webinars is geared for your information and education only. And you know that you take full accountability for any trades that you make. We hope to help you make better decisions in the heat of battle, but ultimately you've got to take that accountability and do check with your tax advisor before you make any investment that's going to affect your financial situation. Now, bottom line is that we're talking about getting you pointed in the right direction today. So when you talk about the 3 E's of education, execution, and ultimately and exploration, you've got to find yourself pointed in the right direction. What I want to share with you is a little market overview today. We'll take a look at the overall markets. We'll do a little rapid fire at the end on some of the individual situations that are out there as well. But we're going to walk you through, typical time frames for swing trading. We get a lot of swing traders through these rooms, but you can also use this for day trading, position trading, even your longer term portfolio as well. But most of what we're talking about here is short term, how to get more bang for your buck off of short term moves in the market. This market is so what I call manic depressive. It seems like lately it's been mostly manic. Everybody's rushing back into equities. Back in early October it was depressive. Everything was rushing out. So those things will go in cycles. You want to make sure you take advantage of that. We also want to talk about how we manage trades with progressive stops and then spot new trends. We're going to show you a lot of chart examples today of trends that we've been trading in the markets. Now, from this perspective, leveraging technical analysis, I think it's about getting the more time frames you get in sync, the more you'll see your equity tend to go in the right direction because your quality will tend to go up. If you're just trading one time frame on an intraday, if you're trading a 5-minute chart or a 1-minute chart, you might as well buy a neck brace because you're going to get whipped off a lot. I think it's the whipsaws that frustrate traders the most. It frustrates me the most, and so I want to make sure I minimize my whipsaws. There's going to be whipsaws, but you've got to try to take those down so that you know that those are less frequent, and then you're trading what I call the true trends, the true breakouts, rather than getting faked out. So we're going to walk you through that today. And so I'm going to give you a very specific indicator that I use that you can actually apply on any platform. And then we'll show you some of the other filters and scans I use as well on top of that. We're looking for increasing our consistency. When I ask all my big trends traders, what is your #1 goal in your trading? Let me ask you all, what's your #1 goal in your trading out of curiosity? Is it to make a ton of money and be willing to take a little bit more risk, or is it to get greater consistency out of your trading, making steadier money, willing to give up a home run for knowing you're getting greater predictability, or something else? Are you looking for some way to manage the fear and greed, some way to just protect your capital? But consistency seems to be a popular word that a lot of you are mentioning, and getting good at it, as Christopher says. I mean, you gotta say that you can do something right, and then go from there. One of you mentions building flexibility, another mentions capital growth. Okay, so we want growth and we want income along the way. So we've got to have ways that filter out a lot of our bad potential trades, because let's face it, there's a lot of ways that you can trade well in the markets. There's also a lot of ways you can trade badly if you're not careful. So you've got to filter out some of that noise. The way we do it is looking for where most traders are getting too hair trigger and reacting right on what looks like the first move out of a little range. We call that the setup, potentially. It might be breaking out, but it might not. We want to see some proof from the market or from the stock that it's starting to go in the right direction. This is what I call confirmation. This is where I think a lot of traders miss the opportunity to let the stock prove it to them a little bit, and then look for how you go ahead and take advantage of that move. So we'll share with you a variety of those patterns here. Now, the setup is an indication the trend might be developing, but you don't want to rush in right on that first little possible turn. You've probably seen that in your own trading. You see a possible turn in an indicator, a stochastic, a MACD, name your indicator of your preference, and then you see it turning, you buy on that turn, and then you get immediately faked out. You want to see not just the turn, but the follow-through. You can apply this confirmation concept to just about any indicator and improve your overall results. And you'll also reduce the total number of trades that you make down to higher quality trades. So we're going to share with you very specific criteria here. Okay, so let me share with you an example here. Let's get into a chart. I don't want to just go out of PowerPoint. I want to get into charts. I use a variety of platforms as well. Andrew was sharing Thinkorswim. That's a great one. I'm using right here TradeStation, because that's where I do a lot of my intraday scanning. Okay, so here's a trade that we made and just booked the rest of our profits this morning on MasterCard, ticker symbol MA. You know, the card companies are basically, cashing in on an improving retail environment. We're right in Black Friday and the holiday season. Obviously, we were wanting to get in front of that and take advantage of that. Let's look at the hourly chart for a second. You can see, by the way, MasterCard's been on a daily buy signal on %R back here when it broke out on earnings at the end of October. Let's talk about the %R rule, and then we'll go into the intraday chart here. We've got the 3 time frames, daily on the right, 60-minute in the middle, 15-minute on the left. So this is how you start to merge the position trader on the right, the swing trader in the middle, 60 minutes, and the day trader quick trade on the 15-minute chart. Okay, now what happens with %R? For those of you that don't know what %R is, Larry Williams developed it as a % range indicator, but I tweaked it based on my testing to say, you know what, when something goes overbought and then stays overbought, that can be actually a very powerful uptrend. Overbought is not necessarily bad, and I see a lot of traders that are starting to finally agree with this concept. I don't really care if anybody agrees or not. What I care about is what my system testing tells me makes me money over time. And this has done really well for our Big Trend subscribers. So the point here is that, look, it went overbought into the top, in this case, 1% of its recent readings when the stock skyrocketed on earnings back on October 30th. Now, that's not a buy for me there until it closes above that day's high. That high was 83.22. We closed the next day, 83.75, about a half point higher. You're saying, whoa, Price, you're buying it so high into that breakout. I'd say, you know what, but in that first move, buying it on the next bars open on the daily chart, there was still more potential there as it popped up over the next couple of days. Now, this is where you want to use your intraday charts to realize when it's starting to roll over, say on your hourly chart, telling you to hop out right off of that little peak. And even trying to give you a sell signal on the hourly chart, I would not take that because the long-term daily chart is on a buy signal. But notice the daily chart settles right back into what we call a %R retest as it tests back down into the overbought level and then gets ready to launch again on this latest move here. So this is where we came in earlier this past week and said, okay, guess what? Now on the hourly chart, it's starting to break out, not only above my acceleration bands there in purple, but also some of the longer-term Bollinger Bands, light blue. But look at the %R breaking out again as of the 25th. So this is a trade we just put on as it started to break out again here the morning of the 25th and then followed through. So this is saying, look, we're setting up. This is on Tuesday. We're setting up for that breakout. So guess what? The markets tend to anticipate that we're probably going to get a pretty good retail season. Thus, people are going to be spending more money with their credit cards. Thus, MasterCard, Visa, and the like are going to be potentially cashing in. We liked MasterCard the best. And you can see, so MasterCard gave this buy signal. And interestingly enough, not just on the hourly. You see today, of course, it's then shot up even more. We're cashing it out into this pop-up because we had the weekly options that are, in this case, expiring today, and we're saying, okay, look, we're cashing out of them into this rally in the morning. Notice on the 15-minute chart, you can see that it was also really having a very powerful breakout there on Tuesday morning as it was surging up, and so we're picking it up there. So what do we tell our subscribers at Big Trends how to take advantage of this? We don't just basically give you, no, we want to give you very specific real-time entry and exit instructions. Okay, so what we do, I'll share with you, we send email alerts and text alerts to our subscribers, and we say, okay, look, here's what we're getting into. We said, look, on that morning, on Tuesday morning this week, we said, look, at 10:27 a.m., we timestamp everything. We say, look, buy to open, BTO, not Bachman Turner Overdrive, a good rock group, but bottom line is BTO, about to open the MasterCard November, week 4, 84 strike calls. Okay, so these are expiring on the 28th here today. And by the way, of course, you know that the markets close at 1 p.m. today, so don't be waiting for something to happen at 4 o'clock today when it's going to close here at 1 on the equity markets and option markets. But bottom line is you can see the 84 calls. We said buy them at $2 or better. Now let's think about that. An 84 call. And by the way, we're out of this now, so you should not be buying this right here. This is now closed at a 30 and then a 50% profit targets, respectively. Bottom line is that, okay, you say, look, we bought it at 2. And our auto brokers, we have several brokers, including Thinkorswim, Trade Monster, and Trading Block, that can get you in and out without you having to lift a finger. You just tell them how much you want to put into each trade. If you're interested in auto trading after becoming a subscriber, call us at 800 Big Trends. We'll walk you through how that works. So they'll confirm with us, okay, are we in or are we not? And they said, yeah, we're in. We're filled at $2. Now think about that. An 84 call, that means it gives you a right to buy at 84, and we're sending it out at 1027 here when the stock is trading at about 85.90. So think about that for a second. Can anybody tell me if you buy an 84 call, right to buy at 84, and now the stock's at 85.90, what's that worth intrinsically? Pretty simple math, right? 85.90 minus 84, it's worth $1.90 intrinsically. If nothing happens on that option, 84 taking away from 85.90 leaves you $1.90, right? We're paying $2 for it. So we're only paying 10 cents a time out of our $2. That's 5% of the option value is time. 95% of that option is intrinsic value. Yes, there is price risk. If we're wrong and this thing comes back off, then basically we're going to have to close it down if it violates. Now, we were keyed on the hourly chart as our driver here, and you can see the hourly chart came in even on Wednesday's action for what we call a retest. The retest, where we reset our stop, as if it had closed in an hour under that key level there of 86.29. Well, remember, we bought an 84 strike. It's already worth $2.29 intrinsically, and of course we've already cashed out of half of our profits into that pop-up that as the stock rallied even further. Now let's show you how we cash out and what we tell our subscribers. So we said, okay, we want to place a target on the first half position to go ahead and get out of this trade. That was happening later, that in this case that same day. We were saying, look, we want to get out of that and lock it in at a 30% gain at 260. We got in at 2, get out at 260 if you can get out it and take that quick 30% profit. And then this Trade Monster, as yet another auto we use, that said, yes, we're filled on that trade, okay? And then this morning, you see the pop up, even on the 15-minute chart, it's popping up. We had said, look, you know, if we pop up into some resistance here, somewhere in the neighborhood of between 87 and 87.5, which is our upper band here. You see it's gone even a little bit beyond our upside target. Hey, let's face it, you're not always going to get the maximum profit if you go ahead and say, okay, I got a target profit objective here. Let's, as they say, bulls and bears can get rich, but hogs get slaughtered, right? We don't want to be piggish about this. We want to take advantage of where we see an opportunity to really cash in on these trades. And so we said, okay, look, we've got an order in here. We want to get that rest of that order out. Of course, today's the expiration, by the way, so we know we also want to go ahead and say, let's book the rest of our profit today regardless. So we send something right off of the open. A minute after the open, we had a stop working, and we said, okay, let's cancel any open orders and sell the remaining half of the trade. Remember, we got in at 2. Now we're saying sell it at 3. That'll lock in a 50% gain on that portion, right? So we're basically getting our confirmation from our auto brokers, yes, that a minute later, Thinkorswim confirmed we're out at 3. Okay, so 2 into 3, that's a 50% return for just about 2 and a quarter day's work, right, in trading day terms. You know, we got in Tuesday, of course, had the holiday yesterday. And you say, but gee, the trend looks up. Why would we sell it? Well, today's the last day, and we were right into some resistance on our daily chart, so we're not gonna try to bet that resistance is going to be broken if we see a spot to go ahead and lock it down. So that's just an example of what we do. We'll show you more examples on how we do this. Now, what you see happening with the whole principle I'm teaching you about overbought going to more overbought is based on this idea that these big trends are fairly unusual. In the classic 2 standard deviation model here on the right, you can see that the classic, say, Bollinger Band that you would look at with 2 deviations would tell you that about 95% of the time it should trade within that Bollinger Band. I actually founded Big Trends in '99. We just had our 15-year anniversary here just a couple weeks ago, and I founded it on the concept that, you know what, we find the outliers. Speaking of that, it's a great book by Nassim Taleb called The Black Swan that goes through these outlier concepts. You know, of course, he published it in the 2000s. I was already trading it from the 90s on the same principle. You find these outliers. You say, that's only supposed to happen 5% of the time, but you know what? It happens more often than you expect, and it happens to be the bigger opportunities. We want to trade the outliers and take advantage of these moves that aren't supposed to be happening. You know, you think about the financial crisis in 2008. wasn't supposed to happen. You think about the real estate boom and bust, wasn't supposed to be that dramatic, right? You think about the 10-year run in gold to the upside, and now the bust that's been happening in gold. We've been cashing in gold and oil on the downside here, while still taking advantage of equities on the upside. Speaking of those unusual moves that aren't supposed to happen, I can't help but want to share with you all kinds of different time frame perspectives. Since we're talking multiple time frames, take a step out, actually a few steps back for a second, and talk about the super long-term trend in the markets here. You have a trend here when we focus on, we've got different bands on here just so you can see it a little better. We're just going to focus on the acceleration bands, the long-term Bollinger, and more importantly, what I'm sharing with you, the percent R. Now, I'm going to give you my specific preferred setting based on my testing is a 30-bar percent R. And guess what? I use a 30-bar percent R on any time frame, everything from a monthly down to a weekly and daily down to your 60-minute and 15-minute. I do not recommend going below a 15-minute chart because I think you're going to get too much noise even with the percent R 30 bar. You say most of your platforms, when you plot percent R on a default, and it may show up as Williams percent R, so just be aware of that, you need to change it from the default setting of usually 10 or 14 bars and move it up to 30 bars. Why? Because this is like an unsmooth stochastic. You see it's a jagged line. And so from that perspective, you say, okay, from that perspective, we want to make sure that we are smoothing out some of that noise, but we like, compared to a stochastic, which I used to use for these overbought signals, we like the more jagged nature of the percent R. So what are we looking at here? The last buy signal we had on the monthly chart was when percent R went overbought at the end of 2010. You say, why am I looking at multi-year perspectives? Because I want you to be on the right side of the bigger trend and then start whittling down to the shorter-term trends. We want to take a lot more bull signals because of this bullish period. We don't want to be fighting that, swimming upstream. It's a lot easier to coast with the water downstream, that basically ride that wave and ride the current. Bottom line is we went overbought there at 11,625 on the Dow Industrials. And then, of course, we closed above it to confirm it, so then we buy the next bars open, 11,892. Okay, so just around 11,900. And then you see the debt downgrade of the U.S. was happening there in the summer of 2000, and we came in for what we call a retest when we come back under that overbought, that line, that top 20% of readings. That was happening officially in September of 2011. That low was about 10,600. You see what happened right off of that. We snapped up hard. That was actually the best one-month move in the Dow since January of 1987. That's what happens coming off of these key, what I call retest points. When we test the trend line, these are great spots. If you miss the first breakout, these are great spots to re-enter a trend on any time frame. Because if you're wrong off of here, you're going to get stopped out if it closes under that low of 10,597. Okay, you'd be out at the next month's close if it closed below that. You see instead it trades below that and then it flips back above. Oh, by the way, if you missed that move, you got another chance right there. And what's interesting is that while it doesn't show at last month's low at under 16,000 on the Dow, it was retesting under that 80% line during the month. But then, of course, we flipped back up by the end of October, and it doesn't show it at the close of October. But it was there for yet another retest on that spike low off of this support. 15,855 was last month's key last retest that we've had. The point of this is, guess what? We're in a bull market. I'm not telling you anything you should already know, but so many of you will fight this long-term trend, try to buy puts, try to guess a top. That will be a very expensive lesson that you'll have to learn to say, how do we start making sure you're taking advantage of the trends that you see? Trade what you see, don't trade what you believe. You can see the last buy signal was from 2004 and got you out at the start of 2008. 12,600 got you short into the worst of the sell-off in 2008, 10,847. You can see here that you're not going to try to pick tops. You're going to try to trade the meat of the move through the middle of that trend. So the bottom line is that we're looking at a situation here where you went from 10,800 to about 6,500, down about 4,000 points on that, and actually hit that band support. Oh, by the way, within TradeStation, I can go back on the Dow a whopping 90 years. You can see, by the way, you've heard of the Roaring 20s. That was the Roaring 20s with a retest in 1927. I wasn't around to see it, but you'd know how to trade it. And bottom line is that, oh, by the way, you've heard of the Great Depression. Well, guess what? The Great Depression kicked in after the percent R hit in the fall of 30. The crash was in 29, but the signal didn't confirm here. We went through a choppy year after that, and we basically broke down at 205 on the Dow down to a low at 40. Okay, why am I talking about something that happened 90 years ago? Because the idea is that, look, when you're 85 years ago, you can look here and say that was an 80% drop in the Dow. People were swearing off stocks at that point. You know, we went through the Great Depression. Oh, by the way, while people were swearing off stocks, you got a buy signal in 1935 at 104 on the Dow, going up to 195 over the next 2 years. So the point of this is, through all kinds of market environments, that has been a phenomenal indicator. Even, and of course, there's the crash of 87. Guess what? That was just a %R retest. Okay, I'll get out of the long term. We'll go back to the short term. But the point of this I want to show you is that we test everything that we do. What's phenomenal, I showed you that chart on the Dow and how it hit a low at 40 back in the 1930s. Not a bad spot in retrospect to have been a buyer, but the point is the next buy signal came about 100 on the Dow. But what I think is phenomenal is, despite a 90-year overall bull market, this system's been very profitable on short trades. This assumes you bought 100 shares of the Dow Industrials, which you can't do. So don't look at the dollar signs. It's not making dollar promises there, but it is telling you that, you know what, the equity curve of this system is pretty much up and away, with, of course, the latest signals in total dollars being the most powerful, because the Dow's at a much higher dollar value now than it was. I mean, you saw it picked up an 80% profit on the downside in the market from 200 down to 40, and ended up getting out at about a 60% total profit when it stopped that trade out. That bit of history, as Kizraj says, is very interesting, I think, as well. So I think so the point is, it works on the long term, but guess what? It also works on the short term. So we're going to show you other examples. Well, you know, Andrew was talking about oil prices. You know, check out oil here. This is phenomenal. Look at where oil has been on the %R on the daily chart. It has been in two big sell signals off of we didn't get the peak. We're never going to catch the peak. You see, it was trading to the upside at first. We were also above the 200-day, and as we started to break the long-term moving average there, you got one sell point there. And look at your latest sell signal from October the 6th. The USO, this is the ETF that tracks oil prices, was at 33.77 when it confirmed that oversold mode. You zoom that in for a second, and look at what happened. If you missed that first sell, you had a retest on the next bounce right there. And look at what happened last week. Going back on the 21st, last Friday, you got another retest. What's a retest? A retest means that you're coming up to test that oversold threshold. See, we're focused on the top and bottom 20% of readings, and we test up above that. That's another key high that you would use to reset your stop at 29.14. Guess what? If you were buying you know, right into that retest, which I do all the time for my students. We actually did that for one of my workshop rooms. We said, look, buy into that retest and take advantage of this drop. Even with the OPEC meeting, you see that that's been very, very profitable for just the last week as it snapped up off of there. So this is the kind of breakout and retest system that we trade. Now, another taste of something I do that a lot of other option traders are not doing that shocks me is that we don't look at just stock charts. We also look at what I call the option chart. You say, I've even had option strategists that are very famous telling me, why are you bothering to look at an option chart? That's just the same thing as a stock chart. It's a derivative. I'm going, hold on, you're an option strategist. You don't realize that the option is also factoring in two other critical pieces of information. The time decay that's happening in that option. You know what options are. They're a time-limited asset, right? That's why a lot of people get kind of jaded after they try to trade options, not knowing what they're doing, and they blow themselves up or have a loss, and they say, oh, that's a tough game, I don't want to buy options. Well, that's because they don't know what they're doing. You need to know what you're doing. The bottom line is that education first, right? That's why we're here today. But the point is that with time going by, if you bought an at-the-money call and your stock stays flat, you buy a 50 call, the stock stays stuck at 50, your at-the-money option would expire because that time erosion is going to eat up that option. That will show up in the option chart. How many of you have had the experience, just a quick virtual show of hands, where you were right on the stock and you still lost money on the option that you purchased? Anybody had that experience? Probably most of you have had it, right? And you thought that the game was rigged against you, right? But the reality was you were just not looking at underlying stocks that were moving fast enough to overcome this loss of time. Or if you bought it wrong and volatility was too high, say right in front of earnings, you know, we've heard people say, oh, yeah, this stock had great earnings. I'm going to be cashing it in after the earnings. And then guess what? The stock's not up enough to overcome for the volatility that drops after the earnings hit. So we like to trade them a lot of times after the earnings, okay? And so bottom line is you buy them right, you can take advantage of this and not let time work against you. That's why as an option buyer, a lot of we teach is buying them in the money. Okay, so if you're buying the option in the money, then from that perspective, like the MasterCard example I showed you earlier, you're going to be a lot more effective. So let me show you an example of a trade I just cashed in on today on an airline stock. United Airlines. You say airline stocks, those have been terrible long-term investments, and that's true. I would not recommend buying airlines for the super long term. They've had a good couple of years. This is United Airlines, and United merged with Continental, so it's now called United Continental Holdings. You see the breakout that happened here on the daily chart. It was coming back in this past week for a retest point here, right into this low on the 21st last Friday, week ago today, at $54.61. Not just on percent R, but also on CCI, the Commodity Channel Index. Now, the reason I use that is it's just another useful filter for me that I can take advantage of here. So what I was recommending to a group of my subscribers is saying, look, we want to take advantage of that by buying the December 52.5 in the money call when it was about 3/4 intrinsic value. Now, this is pretty interesting. This is the option chart on the United Airlines December 52.5 call. Now, you see percent R is a little bit noisy, but look at this confirming indicator down below, the CCI. CCI broke out, and then it confirmed above there, so it was confirming at about $4.25. And the point is here, if you're patient and you wait for the retest points on CCI back under its overbought threshold, and you'll learn about this as a subscriber. I don't want you to think you've got to figure all this out in one hour. This is stuff that I've learned over 25 years of trading and through a lot of testing that me and my research team do on an ongoing basis. You see that first low is 340, and it popped up within a week to about 689. Well, when we were recommending this over this past weekend and people were buying into it this Monday of this week, bottom line is that we were saying, look, there's your next retest on the option chart. It just tested at 356, closed at 390. We said buy it up to $4. So here on Monday this week, they were buying it up to $4. It opened at $4. You see it traded as low as 384. And then you see what happens. It traded to 399 the next day. So I had a couple days to get into it. And then with that oil price drop, you see what's happened today. We said get out at half at a 50 or better percent gain and the rest at a double up at $8. You see it actually opened at 705 for a 76% gain, and then it hit $8. We said take the rest out here at a double for a week's work. Not bad, right? The point of this is if you're patient and you buy retests, you can actually, it takes some guts, right? Because the bottom line is that you say, oh my gosh, look at those negative candles. Look at how day to day it looks like this thing's really correcting. But if you can, again, take a step back and look at the big picture, you see it hasn't broken any recent swing point lows from the last key low. It broke to a new high. Now it's retesting back near those lows. But more importantly, the structure of the trend is what we care about. The structure of this trend based on these indicators like CCI, and the things we teach you like percent R, is intact. And so when that structure is intact, you say, look, you can buy well, kind of like buying the low end of a channel, and then you can sell it up into the upper end of the channel. You're getting these higher highs. Look, yes, it's a little higher than what we sold it at today, but bottom line is, look, we got our 75 and then 100% profit, and sure, there may go a little further, but then we'll try to buy the next retest point and leave the breakout there to everybody else. It's an eye-opener when you start looking at option charts to say, you know what, I pass on a lot of trades that look okay on the stock, but then the option is too expensive, or the option's price more volatility, or something else going on. So from that perspective, we want to be careful about that. Now, the interesting thing for you swing traders out there is you look at, and Max asked about head and shoulders on a retest. It's interesting, head and shoulders patterns and all kinds of other patterns, cup and handles, there's all kinds of potential patterns you can look at, but everything I do is based on very quantitative specific testing, and I think it's very hard to go quantitatively test possible head and shoulders patterns, possible Elliott wave patterns. I found that basically it's better to have a very clear, simple, specific point like a percent R retest or CCI breakout or retest, and then say, how do I do on those over time? So you'll see me keeping it a lot simpler than maybe what some traders tend to try to make it. I think that, it's like Einstein said, keep things as simple as possible, but no simpler, okay? You'll see a lot of the swing trader trades we trade are a lot of the blue chip names, Disney, Caterpillar, some of the casinos like Vegas Sands has tested well in our swing trader pattern. But even stock like American Express and IBM. Home Depot has been really good to us, you know. So it doesn't have to be a wild and woolly tech stock for you to create a very nice risk-reward profile. Look at 3M recently. 3M's been a phenomenal mover, and then gold. Gold's been a nice mover as well. Now, we don't. Speaking of gold, we don't do just straight purchases on everything that we trade here. So, for example, one thing that I recommended here on GLD is we got into a GLD trade out here at let's see, the specific entry price here this past Wednesday, just a couple days ago, right before the holiday. We said get into gold, put spreads here. We said buy the December weekly options 118 put and sell the 115 put for a net debit of 195. Okay. Had to make sure we had the right price out there. 195 on a 3-point max value for that trade. Now, speaking of that for a second, let's look at gold. You see what's happening with oil today, but you know what? Gold's getting hammered as well. If you looked at the GLD. Now, here's a case where we were actually trading GLD, not just because you see percent R and CCI were both coming into a retest, but also the DMI lines. This last panel that you've probably been wondering, I haven't talked about it yet. What am I looking at there? That's where the directional movement lines have what I call key test points. Now, the last key test point, the bears have been in control in the DMIs ever since we broke down on GLD officially right there. But bottom line is that you can see that the retest was right there at about 115.96. And I looked at the option charts and said, yeah, these are priced pretty attractively here. But you know what? We were trading around 115.16, and I said I'm going to be really conservative here, and I'm going to sell what I think is a very expensive option, the weekly 115 put against an in-the-money 118 put up here. So I did that 3-point spread for less than $2 at $1.95, meaning that by the end of next week, if we can stay at 115 or less, I'm positioned for subscribers to make more than a 50% return on their money for just holding this trade for about 6 trading days. You know, we got the half day today, a partial day Wednesday afternoon, and then all of next week. So you see, we're off to a good start. It's popping down on the downside. You'll see that'll also show you that, interestingly enough, it did not follow through on your intraday time frame. So I'd be a little bit concerned here that 113.21 and even on the hourly chart 113.05 are going to hold as support here. So we're probably not going to be breaking down that much further today or even maybe Monday and saying that says that we could be support. But now I've got a cushion. Now that the 115 support is broken, if we go back to 115, I'm okay as long as we don't start trading a lot back above 115. Because remember, I sold a 115 put. That's basically now all going intrinsic and with the time just gradually melting on that option over the next week. If we stay below 115, we'll pocket that 50+% gain in a week, in a day. Okay, so this is the bottom line here of what we look for with the trends approach. But we're not just buying, we can do selling strategies. All this is based on having very clear entry and exit rules. With TradeStation, and you can do this also in Thinkorswim or Metastock, there's a couple of other platforms where we have our toolkit for all of my big trends indicators available. I'll go through scans here in just a minute. We can go code any given system test. So when I ran system tests, this is going back 20 years on Apple, you know, from 92 to 12, and you could do it again up to date. It would show you very similar powerful results. Of course, you saw that Apple, you wanted to be long. You did not want to be short Apple. Apple's short signals on average on percent R were not working. Guess what? That makes sense, right? Because Apple's been in a monster long-term uptrend. Oh, by the way, speaking of Apple, you know, if you look at what it's done since, you say, well, that was 2012. How's it done since? Well, you know what? It's done pretty phenomenally since as well. So when you've got history on your side, it doesn't guarantee anything going forward, but it sure does help, right? So bottom line, here's a classic example. When you see a bad percent R signal, and by the way, it wasn't outside of our bands and some other things that we look at, but let's say that you just took a percent R signal there and you bought it at 102 and you're out at 98.5 2 days later. You're wrong on that one by about 3.5 points. That's not much fun, right? But guess what? When you're right here at 105, you're still in this trade at about 119. You're up 14 points. The secret to any good trend-following system is cut your losers quickly and let your winners run. In fact, you'll read that in a lot of the textbooks, but what my issue always was is that, you know what, they never told you how to do that. They just told you the concept, but they didn't give you the specifics, okay? What Big Trends is all about is giving you the meaningful specifics where you catch a breakout after earnings, like back in April of this year, And we even told our students, we said, look, this retest that came in here after the breakout was a great low-risk entry as you caught it from 83 back to 93 over the next month and a half. So, you know, the bottom line is it's been a beautiful example of how you could trade it. And you say, you know what, since then, even on Apple, we've been in and out of multiple other trades looking at how we take advantage of these steady uptrends in Apple on your short-term charts. You can see on your hourly chart over here, you'd focus on, wow, look at that. This thing is still, you know, moving on up here ever since that hourly buy signal that came in on the 11th. That's very unusual for an hourly signal to last that long. It just shows you how powerful this trend has been in Apple. Interestingly enough, it just gave a retest on Wednesday, and we'd be using that, if you were a swing trader, we'd be using that 118.12 low on an hourly close under that. See how it traded down just a hair underneath it this morning? Did not close below it. The close is another key separator of the big trends approach compared to the approaches of most traders that are overreactive based on the intraday charts. Okay, now you see a lot of these indicators I use are things that I've tested and developed over a lot of years of trading. Some of them are indicators that others have initially put out in the trading space, like Larry Williams' percent range or percent R indicator. But then, you know, we tweaked it based on testing to find the best of the best opportunities. And you see a lot of what I preach is not just momentum breakouts. It's about how do you find a relatively lower risk entry point off of a retest. Because guess what? Some of those are not going to work, but if they don't work, it's going to knock you right back out real quickly, okay? Now, with the weekly options accelerator I was sharing with you, and I'm going to give you a way that you can take advantage of all of my different recommendations here over the next month to kind of finish your 2014 strong and show you how you can start getting ready for 2015 to be your best year ever in trading. Bottom line is that what we're looking at here is you've got to have catalysts. So a big catalyst for me is earnings, but I do not trade in front of the earnings. I wait and let the stock prove to me that it wants to break out after the earnings, and with that breakout and volume surge, we can follow through from there. So that's one of the catalysts that we look for. You see, my strategy for buying is to buy them mostly in the money. This is a higher delta approach, which means delta, of course, for those that don't know options, is, you know, say I've got a delta at 80%. That means that if the stock goes up a point, I buy the 80 delta call. That means that that option should go up 80% of that point, or $80 on one contract. If you bought that contract for, say, you know, $400 and that option goes up $80, that's a 20% pop for that 1% or $1 bang in the option. Now, in the stock. The bottom line is also you want to keep your stops relatively tight. So we a lot of times we'll keep our stop losses around a 30% stop for these type of approaches, or sometimes less. And then you want to progressively trail your stop. And we don't do it at every single bar. We do it just at the critical inflection points. Okay? And so from that perspective, Max says, I just summed up 3 books in one sentence. Thanks, Max. Bottom line is that, you know, from this perspective, it's only about setting stops, again, in our view, after you get your first stop in there. We don't want to get noised out of otherwise good trend structure trades. We want to focus on where's the next critical, what I call inflection point. And guess what? You talk about windfall gains. You saw the windfall gains in the oil market today on the downside. If you're like we're in a put spread on USO, guess what? We're saying thank you very much. We're putting our order in to cash it out this morning. And like I showed you on examples like MasterCard, it's gone up a little more since we sold this morning on a gap up. You know, same with United Airlines, gone up a little bit more since we got our double on that option today. You know, bottom line is that, as I said at the beginning, bulls and bears can get rich, but hogs get killed and slaughtered. You do not want to be in that position. You want to follow a plan and don't play the hindsight game with yourself about how you could have made more. Focus on how if you're taking steady money out of the markets and controlling your risk. Trading is, to me, the greatest game. And so, also, this is another way that you avoid getting yourself set up for too much risk. Even this is especially the case, you know, when we've been in this like great run that we're in right now. The risk would be that we start to get overconfident. You start saying, this game's easy. You know, I should have quit my day job years ago. Well, the bottom line is that's the problem with that is that that's where people's emotions get the best of them. You know, if you're going to be a professional trader or trade for a living, you've got to manage your capital very carefully, and that helps you manage your emotions very carefully, okay? So the bottom line is that will really help you to just not commit too much capital per trade. We always encourage people to start small in their capital allocated and then build up. Now, in the case of some of these premium services that we have, like Weekly Options Accelerator and some of our other programs, those involve nightly updates. Some of the other ones are, maybe a couple times a week updates. And we always update every single open position, whether it's a winner or a loser. As I call it, the good, the bad, and even the ugly. We will never leave you hanging on a trade. You will always know where every trade stands. And we'll always tell you when to get out of not just winners, but also losers with the specific real-time updates. Now, I'm going to share with you a little taste of what I do in my trading scans, and we'll walk through how you can take advantage of all of my different trade alerts over the next month through our Platinum Service Special today at half off of the usual rate. These are where we send out real-time entry and exit alerts. Okay, so it's real-time entry and, more importantly, exit, telling you when to get in after my team and I run through scans, and I determine every trade that goes to all of our subscribers. So this is literally, you're getting my 25 years of expertise, making sure that it's an extra filter, that trade makes sense, that we're not stepping in front of some big event risk or other big surprise. And there will be losing trades, but the bottom line is that if we manage those carefully and let the winners do their thing at a first target and give them the second one a chance to run to an even bigger profit, this is where you can get some really attractive opportunities. So how do I do this? Okay, so one of the reasons I'm sharing with you TradeStation is I really love their tool that they call Radar Screen. Radar Screen, it looks like a lot of data for you, and you can see I've got my option charts down below. Interestingly enough, almost all the ones that we're targeting for really strong signals were in the oil sector this morning, but we didn't get a lot of confirmations there, so we did not chase those moves, but we'll watch those and see what happens with the retest. Let's look at the stock side for a second. This is actually an hourly chart. Hourly setup. Okay, so we can change our interval to a daily or a 15-minute, whatever you want. You remember I mentioned to you how United Airlines, we were cashing it in this morning. You see it's up almost $5. We were cashing it in that 75 and 100% profits this morning when it was up about $4. Okay, so it's gone a little bit more. Hey, you know what? Guess what? It was already signaling even late on Wednesday that it was breaking out yet again here. But how are these color-coded? Let's look at %R scans for a second. We actually own Whole Foods Markets as a debit spread. We've already sold half of it, but we're still sitting on half of it for our smart options traders in our debit spread portfolio there. You see, when it's hitting 100% on %R, that means it's closing at the high of its recent range. And so what this is telling me in a very quick overview is the strongest of the strong stocks. You see CRM, that Salesforce.com. Facebook, it's not giving a color there, but it's been stuck in the 90% range for the last several days. So we'll look at that one here in a second. Remember I mentioned Home Depot's been good to us. It's actually now giving a breakout. It's up $2 today. And again, there's United. We've already cashed it in. So KMB, that's Kimberly-Clark, household products. So we go through this list. American Express, again, AXP, that's another credit card issuer. Guess what? That's telling us that the market's expecting a pretty strong retail season. Now we flip it around and say, what about the bear side? We go look at the worst of the worst real quick. We see, okay, what's really weak here? Guess what? It's gold. We mentioned we already have a position in GDX. We're very happy for that. You can see, interestingly enough, the rail stock NSC getting whacked today. That's kind of surprising. And also UNP. Thankfully, we made some money on UNP recently and we cashed out of it, and that's why it pays to get out and then look for a fresh opportunity later. We mentioned oil prices, USO. There's the red happening in a lot of these oil names. Halliburton's one we were pointing out to our subscribers a week ago, getting absolutely pounded today. Even a stock like Joy Global, some of these metal stocks. This is very deflationary, disinflation, or even deflation, which actually is going to be interesting to see how the Fed reacts to this, because when you see these stocks losing 10%, that's Anadarko losing 10% in a day, that's sending you some pretty strong deflationary signs. That's probably good news for bonds, and so guess what? Bonds are going to benefit from that kind of a situation as well, because the inflation fears are not there in this market. So once I do those scans, then I run through and I say, what's going on with some of those names? So I mentioned like the rails. This is probably not going to give me a signal because the rails have been so strong on the daily chart that this is going to be an interesting conflict in time frames. Okay, you've got bearishness happening on your 15-minute charts. That says we would not step in front and try to buy this on the intraday time frames, but the daily chart is coming in for what we call a bull retest. So it's going to be crunch time here coming into next week to see who wins the war after today's lows are in place. I'm not going to trade this because that's a conflict. daily is saying buy the dip, and hourly and 15-minute are saying it's bearish momentum right now. So we stay away from those. But then we run through all those other examples. I mentioned Home Depot. What's that doing here? Home Depot is still on a buy signal. You see, if you bought the retest a week or even a couple days ago near the retest level again under $97, that looks pretty good. But you know what? It's there on the hourly. It's there on the 15-minute. This is now what we call triple confirmed. That doesn't guarantee anything, but it says, you know, on a breakout, I could typically buy half of my position exposure. So from there, what I would do is I would go in and I would look at a tool like with the Options Station Pro. You know, you can go in and start searching for which options make sense. You know, we're not making specific trades here. That's what we do for our subscribers. But we start looking at, okay, you know, depending on if you want to trade Home Depot as more of a swing trade, we'd probably look at the monthly options that go out to December 20th. This would be a little safer play. And you start looking at the high delta options, typically about an 80% delta, maybe the 97.5 call, looking at that. But I also might consider it and look at it relative to the weekly options for next week and say, you know, the weeklies could be a choice as well. They have 1-point strikes. The 80% delta, interestingly enough, here is the 98. But you know what? Those spreads are a little bit wide here. The more speculative trader might consider the 99, but you know what? That's got too much time value for me. So I'd say, well, can I get filled with that wide of a spread? That's probably going to push me to lean towards the monthly options instead. So we walk through all that analysis and do what we think is the right thing to do for our subscribers here, okay? And then we'll send out specific real-time trades because of that, okay? So that's how we come up with real-time trade ideas. Now, ultimately, it starts with defining the trend. You see that the core long-term trends and then working your short-term trends, getting those confirmations with a tool like %R, and then you saw I was just starting to give you a taste of the filtering that we do, not just with tools like CCI and DMI and ADX, but also with the options chart filtering as well. That screens out a lot of slower boats and gets us on the speed boats that we think have the biggest opportunity for success. Now, I've shared with you a variety of the methods that I use here, from the weekly options trades like MasterCard to the swing trades that we'll do typically over about a week or less. And the even trades. We'll do quick trades on the 15-minute chart. So I can run 15-minute scans and look for those. I wouldn't recommend a day trade right now today because we've only got another hour and change before this market closes here at 1 o'clock today, hour and 10 minutes. So I'm not going to, I want to give myself typically the full day for that trade to work. So we'll get those out usually in the first 30 minutes to no more than an hour on a day trade for the options day trader. Now, a Sunday night trader is one that I put out as a weekend trade. If you're worried about missing something intraday, you're not auto trading, this is something that I'll do as more of a position trade. Over the next couple of weeks, usually, we'll do the current month contract, and we'll look for opportunities there to book profits. We did a trade there actually recently on Procter & Gamble. If you came in late and you wonder what I'm talking about as far as what we offer at Big Trends, we put out very specific instructions about where to get in and where to get out. You know, so we basically said, you know, if we're doing, you know, like Procter & Gamble, we're saying, okay, you know, P&G surging up today. We're saying thank you very much for that, Mr. Market, because you can see, look at Procter & Gamble here. 1 second. So P&G, we were, again, buying into the dip you see that was happening over the last couple of weeks, and CCI was holding in there. So while %R gave a slight violation, we liked that CCI was still holding. It was still holding on that retest. That's actually what we call a double retest on Monday, 87, 86. And you see what happens? If it holds, you'll a lot of times get a very sharp snapback. If it doesn't hold, you'll get a lot of times mild breakage at the next bar's close or one of the future bar's closes. So that's one we've been cashing in on today for Procter & Gamble. ETF Trader is where we're using exchange-traded funds, the really active sector and commodity ETFs and even international ETFs, to go book profits there as well. So we send out real-time trades for both specific buys and debit spreads. We've been doing a lot of specific buys lately because volatility is so low. And then my Smart Option service, we're doing the vertical debit spreads. The last piece of the puzzle that we've been doing a lot of trades on is our Rapid Options Income trade. These are, you know, quick to swing trades where we're doing credit spreads. I know a lot of you like to do credit spreads. So, you know, with Rapid Options Income, what we're doing there is we're saying, you know what, we've talked about a lot of growth strategies. We want to give you some good income strategies as well. And so Rapid Options Income is a great tool where we tell our folks, you know what, we had 2 trades this week on Rapid Options Income weeklies on Apple and Walgreens put credit spreads, and they both are safe to expire, worthless for max profits. We send these kind of alerts. This was sent an hour ago, saying we're monitoring. We'll send you an alert if we need to close anything down. But in the meantime, you, of course, with credit spreads, get to let those options go out worthless the majority of the time, pocket that money, and go in and do it the next week. We love using weeklies with that approach. Okay, and so the way you can take advantage of this is you can go to the special page we set up here for you at bigtrends.com/platinum. Now, usually all these services together, if you bought them all individually on our website, would cost you about $800 a month. Okay, what we've done is we said, you know what, let's have a really attractive Black Friday offer here for folks in the Trade Thirsty event today. We're giving you the chance to get all 7 of these recommendation services for the next 30 days for just $299. This is going to be more than 50 trades over the next 30 days. Okay, now this is for the active trader, or if you say, you know what, you want to start to get a taste of what you've been missing, you can really take advantage of this. The other thing I'm going to do as an extra bonus, after you see all the value you get with all of these different programs here for just $299 a month, you can see, by the way, all the services summed up below, is I'm also going to give the opportunity at the end of the 30 days, if you liked what you saw and you want to take advantage of our full annual special that we do right at the end of the year for the Platinum Club, you'll be able to apply that $299, all of it, to a full annual package. So you'll basically be able to let that work for you as you use savings. If you like what you see, you're going to be able to lock in our best special of the year and apply that full $299 to your annual purchase for all of 2015. So the bottom line is $299 over 50 trades or more gets you down to less than $6 a trade. You can see we've got everything from option buying, credit spreads, debit spreads, ETFs, individual stocks, and then, of course, you can see the typical gain targets, the type of vehicles we trade from weekly options over to monthlies, and, of course, ETF options. Some of them are aggressive, some are conservative, some are kind of in the middle. Everything from day trades, swing trades, and even position trades for all different types of subscribers. So when you sign up here on our secure form here, you just hit the Get Access Now button. You're going to get 50 trades or more over the next 30 days for just $299. That's all 7 of my programs. These are programs I've tested to have trading edges over time. You'll see how to really take advantage of this. Tim has a good question. Do you have to have a TradeStation platform to use this? You do not, Tim. I'm glad you asked that. I'm just showing you what I do. You could do this yourself, but that would take you a lot of man hours, a lot of your time. A lot of my subscribers tell me they care not just about the return on their investment, but they care about the return on their time. So we have a lot of people that send us nice notes about they appreciate cashing in on, especially with the auto trade, while they're out playing golf or benefiting from other things they want to do in their retirement or in their other life. Or if you're working for a living, you can still take advantage of this way. So with this, you can see it puts you to this page. Now, I would think we would have auto-checked it, but we're going to make you check all these services that you're going to get, all 7 of them, as part of this package. Usually, like I said, it'd be about $800 a month on our site. We're doing it today more than half off, just $299. So when you go to that page, you click on those. Just hit the green checkout button after you click on those, and then you'll see it pops up, the key fields in bold. You're on a secure page. We don't store any credit card information here at Big Trends, and it's done through a third-party, very secure provider. And bottom line is that put your key information in here, and then you can put your whichever card you want to use, MasterCard, Visa, Amex, or Discover. That's why those stocks are all going up, because Black Friday, everybody's taking advantage of all kinds of great specials like this one. And then, of course, you can just say you saw us on the webinar link with me, click on the terms and conditions, and you can see here that'll lock you in for the $299. I think we've got this set up as an auto renew, so if you don't want it to set up as to renew after 30 days, $299 every 30 days, then just tell us. We give you all the information about how this works to turn it off. You can send us an email, say you don't want to do it, or you can send an email and say you want to apply your $299 to the best annual special. Once you've got all that in, just hit the submit order button. You're good to go. Okay, so that's at bigtrends.com/platinum. Let me just make sure I got that in there. Oh, thank you for posting that, Jeanette. I appreciate it. Let me do a quick reminder, too, about, I think on the page, I probably skipped over it, we probably show you all kinds of other stuff that you're missing down below there. Yeah, and you'd see I'm the one that makes all the ultimate calls on these, so I'm overseeing all this. Yes, I've got other analysts that are sets of eyes that are helping me to scan for trades, looking for different things across different time frames, all day, every trading day. Okay, so we're really zeroing in on what we consider to be the best of the best opportunities here. So from this perspective, and you can call us if you have questions, but you need to mention that you saw us on Trade Thirsty to take advantage of this best offer, because we want to definitely give them credit for, taking you to our best Black Friday special. Now, just a quick reminder, if you want to do just a quick couple minutes at the best of the best stocks, we talked about Apple earlier. I'm just going to get through the top stocks that we trade. A lot of times the high dollar stocks are ideal for our big trends option strategies. You can see, of course, Apple's still on a buy on the hourly. Interestingly enough, it just gave a retest buy this morning at 118.36. So that would be our new 15-minute stop. If it closes under there, you see it tried to trade under there, but it did not violate on a closing basis. That closing stop concept will save you a lot of whipsaws. If you're looking at Google, Google's been a little bit weak compared to the rest of the market. You see it's giving a 15-minute buy, but you know what? It's not there on the daily, and the hourly is also in a choppy environment. So I would not take that 15-minute buy looking at those other opportunities. What about Tesla? You look at Tesla and you say, okay, Tesla's getting whacked today. So it's tried to give a little 15-minute sell. Again, was not confirmed on the hourly or the daily. We'd stay away. So we'd go through a lot of different names that we think are not quite doing what they're supposed to be doing. I mentioned Facebook. Facebook's been beautiful on the 15-minute and hourly recently. You see that hourly buy signal that kicked in? The problem was the daily was just getting a key test on Wednesday's high as another key level, and it's not even at a % buy yet. So again, you could trade this, but you would trade it very small if you're going to trade your short-term time frames. So somebody asked about Chipotle earlier, and then I've got a minute to go. I started late, but I'm going to keep us on schedule here. Chipotle starting to try to break on the 15-minute. You know what? The hourly was just giving a setup, and this is where you see if that had broken through that 672 hourly, it could have been really good to go, but it didn't happen. You see a lot of those head fakes that the multiple time frame analysis will really save you on here. So bottom line is, as you're looking across a lot of the big stocks, a stock like Priceline, is probably one of the highest dollar stocks out there, but ironically, it's really been Deadsville recently. So we would stay away from Priceline right now and wait for the next opportunities. I mentioned our big opportunities recently have been like we cashed in on the United Airlines big pop. You say, hold on, it's giving another buy on the hourly. That's true. Maybe we can pick it up on the next retest. But we said, you know what, it hit our profit targets, 75 and 100%. Thank you very much. We rang the cash register. Speaking of ringing the cash register, yes, I've been a fan of MasterCard here. And bottom line is, you can see MasterCard has also